Hello, welcome to the market update through YouTube. So focusing specifically today on what could be today's biggest market event, even though we do have the Bank of England meeting, which I will reference just shortly, but also we have earnings from Apple. And so this is the chart for Apple behind me. This is the daily candlestick chart, and you can see it's all to play for at this 212.50. This is the recent low that we've seen in Apple. We've had a rebound from there since, but obviously the shares have been consolidating for a while. It's been a tough period for tech stocks in general, but actually Apple's held up pretty well. You can see this previous low at 212.50 and this rising trend line both coming in at exactly the same spot, and that's where we've rallied from recently. Should we take out that level after these set of earnings, that would be very bearish for the shares. Why might that be the case? Well, if we pull out to the weekly chart, we can see, if I remove this trend line here, just how overextended we are. We haven't been this overextended really since the early part of 2017. Didn't get much of a dramatic pullback there, but we have to go back a fair distance in the chart, maybe over to this area when we're well and above the 20-week moving average. We see a sideways movement for a while before the large correction in 2015. So the point being, these earnings could be good and Apple shares could still move higher. No one has a crystal ball, but the bar for them being good enough to send the shares higher again is just significantly raised when we're this much above the 20-week moving average, which is pointing very directly higher. At some point, Apple has to revert back to the mean, come back and at least test the 20-week moving average, but probably ideally after this prolonged up move, more like the 50-week moving average. And so that would be quite a big downturn from here. That would be talking about sub $200 a share should we try and retest this 50-week moving average, which would still denote the shares in an uptrend, but would just mean that we've had a bigger pullback from these overbought territory. So high bar for Apple this time around. Results could still be good, but if it's in line with the other technology company shares, we could be in for a disappointment, and it could be significant for the overall market as well. Last but not least, seeing some more positivity in the British pound. This is the 127 level that we've been referencing as a while. That should be a base if sterling is going to move higher from here. We've had a decent rally off the blocks, and if we drop down to a 4-hour chart, you can see that this was a nice even downtrend that we had. We hit 127 and we've rallied up right through 129. So this looks pretty positive. We think this is time to start looking at these pullbacks, looking at these dips for opportunities for sterling to move higher from here. All right, thank you very much for watching. Jasper signing out for today.